Okay, recap for Monday, the 8th of December 2025. Can't lie, I've done this market recap early because everything for the day that needs to be done is done basically, right? There's nothing else that's gonna happen today other than maybe a rest of the consolidation, maybe a little bit of an expansion down below this low. But other than that, the day is probably done. I'm probably expecting that we keep the low and then start closing in the range for the daily range for Monday, right? So today's price action was kind of simple, right? First of all, is a no news Monday, right? So I expected a high resistance liquidity run and I expected garbage price action. And honestly, I didn't want to trade it, but I said if the setup is there, I'm gonna trade it. It's not like it has to be like I can choose the days. If it's there, I'll take it. If it's something I can see, if something makes sense, then I'll take it. Alright, for this day, we just need to understand that the drawn liquidity for the week is up here and higher. Okay, so understanding that means we could make relative equal lows. I mean highs. So me already having that understanding, I was like, if we take the high and shoot down, I'm fine with it. If we don't take the high and we make relative equal highs, I'm even fine with it even more. Why? Because we have FOMC Wednesday, right? So if we're already engineering highs, I already know what FOMC is gonna do. If we don't take these highs on Tuesday, tomorrow basically, we're gonna take them on FOMC, right? So this is just as simple as that, really, right? So let's just check with ES as well. Just checking. You can see, yes, is engineering highs and is leaving that high as well, right? It's just obvious play that Monday is just a kind of an accumulation day, kind of it's starting its own market maker buy model basically for the week that will start on Wednesday to start buying back up and going above these highs. That's as long as Tuesday has kind of weird or garbage price action, right? Or if it keeps going lower. Like for example, I had sell side on my mind all the way down to these ones, right? And if somehow Tuesday can get us down and then this eventually becomes the unicorn that I'm talking about as a second stage redistribution to go back higher using FOMC, that'll be perfect. Then FOMC will be, we could start going down more and then it could start zooming all the way up at the PM session with Thursday and also Friday to take out these highs and slightly higher highs around here. Okay. So yeah, that is just a good Monday start to just make the highs, which makes forecasting Wednesday or Tuesday easier, right? So yeah. Anyway, let's get down to the trade. So far, Monday's price, we have the first presented fair value gap is probably what you want to use on Monday to gauge where price is going because you're gonna have liquidity on both sides most of the time. And at 9:30 open, right here we have two liquidities, the buy side liquidity AM and then the buy side liquidity as well from the pre-market. Sell side liquidity from pre-market, sell side from PM, sell side lunch, and sell side AM. So we have more sell side than buy side. So we know if we take this one buy side, at this time we have a ratio of 1, 2, 3, 4 to 1. So what's the most likely thing to do? Is seek the sell side, right? Unless we have a real high time frame objective above us. This makes more sense to engineer liquidity, but you'll keep it in mind. But once price shifts and it looks like it's going down, then that's that's where you target, right? Anyway, because it could have had two options. It could have went down, right, taking this liquidity, consolidated, and then went back up to take the buy side again, right? So yeah, let's just zoom in. Two more things, right? This is our opening range gap, right? Right here I'm checking if price can go to the 0.75 because if price opens up and doesn't come visit this, that means I'm expecting it to just not close at all and just keep going by 10. Okay, so that's the only reason I have it here. But once we close through midpoint, we're not showing that we're bullish anymore, and this is where we create the first presented fair value gap right here, right? So let me zoom it in. Just cut this down. I'll move. Okay, so as you can see, we respect the bottom half of the first presented fair value gap, and this is what I mean by the Monday with no news. Look how many times it goes and visit this gap, right? Goes up, but it's showing it's not willing to close above the upper half, right? It's not trying to close above the upper half. So right now under here is the only reason that you take a trade is, okay, I can't lie, my first trade was the second that we went through this order block down to this liquidity, and basically the new daily opening gap, and that was just a 1 minute trade as a paper. And then the second actual proper trade is I need to gauge what we're doing with the first presented fair value gap, right? Once we go down here, and then we'll come back to the CE of this week or upper quadrant, right? We want to see, can we go and close above the first half? I mean the upper half of the first presented. That means we're going to seek the other liquidity. We're actually going to go higher, and this week is going to be bearish, which doesn't make sense, but that's what price would have done. So it's confirming, it's still something for me not to take a trade. However, once we go all the way down here and take this liquidity as like a quick minor sell side, right, then go back up, there's only two options left. Once we do this, we have to go and start zooming back up, or if we fail, we have to start going down, right? It was just one of them ones. So now that all the probabilities are aligning to either this or this, not a lot of ifs and maybes, then this order block is formed, opening price, bang, tag in, and stop loss. Honestly, I think I'll put it just slightly above it's just such a small risk trade because it should start going down. It should not even pay attention, and then boom, as you can see, a few minutes, and then I take liquidity at the middle liquidity, right? Because it could make relative equal lows with this one, which it did. It eventually did it right here, and then made relative equal lows, went all the way back up, and then went down. And again, Monday, no use, high resistance, liquidity run, just boring price action. One thing that I want to note is just ES's price action, right? ES, when it went down, look at all the liquidity is right here, right? ES does SMT first of all with that liquidity, and that's why you'd be that cautious, because why would I not take it at the first presented? Because here there's a big SMT, right, with this low, which could have taken price up if market wanted to. I'm bearish, I'm still bearish, I want these targets, but I'm not going to force my will until it's basically 100% either this or that, because if I lose this trade, then the market is just something's wrong with it, right? Either I read it fully wrong, or like something's off, right? Because once we go down here again, we put bodies below this, and this is probably like the last line of defense for bullish price action, and losing it once but then twice with an order block as well was just a show easy way. And look how fast the trade is. Boom. And how many handles is that? It was pretty decent, I can't lie. Middle, yeah, 65 handles almost, and it's just few minutes rather than waiting all this time. So yeah, that was the trade. Is kind of garbage Monday, but I guess easy to read, easy to trade if you know what you're looking for. Normally before, and that's my tip, I would just probably get into this first presented, get stopped out because I went break even, and then come back on it again, and then get stopped out, then switch my bias, then get stopped out, and then eventually just lose out, right? But yeah, that's the market recap for Monday, 8th December. Peace out.